Happy Thursday, everybody. Jim Malone coming to you live on Dow. It is was there. I think we're all back. We're all back here. I had to go to a lower resolution. I think a little bit of a bandwidth issue, as seems like always. But let's get into it. The stocks did sell off today in the market, so we're kind of at a situation where we had a few up days, and I think we're getting a little bit of a distribution day today. Hope it doesn't last, but definitely went down a little bit. I did do some selling. I sold all my positions in Palantir. I took the profits and ran, and we'll see what happens. Who knows? But I definitely sold off there. On the market prediction, let's take a look at this for people on TikTok. Hopefully you can see this. Yeah, this is kind of what I'm looking at here, and that is this. We have basically, this is the spider, and we did pull back today, pull back to 308.28, and it had been going up, but it did pull back today. Hopefully we're in a kind of consolidation range. We are sort of in a range between about 390 on the low side and about 431 on the upside. So it's clearly within that range. And what that means basically is that of course we're going sideways. Some up days, some down days, but we're still in an upward trend overall. So that's one thing you've got to acknowledge. We're still in that upward trend. So what's going on basically here, of course, is that we did get quite a bit of a sell-off today. I was surprised at that, but the spider is at 308. So that's definitely something that we want to look at. Let's take a look at the at the chart on that one, just so that you can kind of get a gander at that. And that is the spider. Let's see. Let's go to the. All right. So hopefully we'll see that. There we go. So this is the S&P 500. This is the spider. And we're still above that 50-day line, but and we still are sort of in this upward trend, but we did have the down day today. So we'll see kind of what's happening. It's off a little bit after hours. 407 is what the S&P, the spider is tracking at, and so it definitely had a down day there. And hopefully we can get back to some profitability here, but at least for today. Pretty much everything I had was down, and I did do some selling here, and so here we go with the rest of the stuff. This is basically what there is a silver lining, and one of the things is stocks that are up in price. Now, unfortunately, I didn't have any of these stocks today, but I think it's really worth noting. These are interesting stocks, and I'm going to be probably reviewing them tonight. But the first one, of course, is a company that I don't know a whole lot about. but it certainly is doing well. It's called Nerd Wallet. You may have heard of it. I haven't really. I don't really know much about it, but it was up significantly, 5.94% through earnings. Had some good earnings, and that was up. Also, an interesting stock in here that I have not done much with, but it's a very interesting stock, Iridium Communications. And this really sort of, if you look at this and you compare it to Starlink, which is Elon Musk's service, this is kind of the two companies that are in this space, and it's sort of an interesting space. It's an actual real space. Iridium Communication. Now, this stock has been around a very long time, but finally now I think the world has caught up to them and starting to see some nice action there. Let's see. Anything else on this list? Cal-Maine Foods, very interesting company. That's the last one here. It's CALM is the symbol on that one. And that is the biggest producer of eggs in the world. So they're up. I cannot understand the egg market. It doesn't make a lot of sense to me, but there you go. It's sort of that's the way it works. That seems to be the way it works. Here's what I've got in terms of holdings. I did sell, as I said, I did sell off Etsy, and I also sold off. Palantir. So this is kind of what I have currently in the hopper. I'm holding on to my Chevron position. I think I may be cutting that one. We'll see if they can hold on tomorrow, but definitely, I have not. I've been selling that one off. I've been thinning it, but it's still, probably too big for this britches. Interestingly enough, in mode, which I was doing very well in the morning, I probably should have sold it. It was down today as well, right under that $40 mark, which seems to be resistance for it. Lattice Semiconductor was down as well. That was also down on relatively high volume. So I do have that's my largest position currently. We'll see what happens there, but it is a leader, and I do suspect that if we do get an upturn, we will see leadership there because it's a 96 relative strength. PACCAR, this one just basically even, down 4 cents, nothing much on this one. ST Micro, this also is in the chip space. Roblox, I haven't sold this one, but there's been some adjustment on this one. We'll see how this one does. I may be cutting this one as well. Permian Resources, this is pretty much even, and it's kind of been even. I came into this issue at 10.26, and now it's 10.31. So not a lot of action there. One bright spot was AEHR Test Systems, and of course, this is in the semiconductor test space. That was up today, even though the rest of the market was down. So I definitely like companies that can move against the trend, as it were. The XLE, which is the Energy Select Spider, it was down as well. So overall, kind of a down day on the market. Again, I did trim a little bit my positions, and we'll see. We'll see kind of what's going on. All right, well, let's get to some of the questions. Thank you for waiting here. I always appreciate it. Let's see. Okay, so now if I can get everything on this machine working right, that's the main problem. See how I'm doing. All right, Charles, thank you very much. And what about AMAT? AMAT. Let's take a look at AMAT and see what we can see on AMAT. Oops. Not quite getting this one right. Not letting me have the... There we go. Let's just pull it over here. AMAT. Applied Materials. So this is AMAT looking, let's put this up for everybody on TikTok. I have to manually do the camera there. Oh, come on. It's flipping the camera, but it's just, there it goes. It's flipping and flopping, not going the right way, but there we go. Okay, so here we go with Applied Materials. This is looking like it is getting ready to reverse. Let me take a look at that. Applied Materials, a little bit of a bandwidth lag here again. Sometimes I have good bandwidth and sometimes I don't. And I think this is the times that I don't have the greatest bandwidth. Golly. Sorry, I'm slipping around here so much, but let's see if we can pull that up. There we go. Okay. So what's happening there? You basically have this kind of, this is not really a cup. This is a cup with a very long handle and then a little handle there. So the question is, are we moving up from that? We definitely moved up after ours. So this is looking fairly good. This looks like it may bounce tomorrow. Earnings were good on this one, up a little bit on Applied. I definitely like the space that it's in. Here's some problems that I have with it. Of course, 56 relative strength. I'm not that excited about that. Let's look at the technicals. We're basically right on the 21-day line. That's definitely where I like to buy. But let's go over to the weekly chart to see what the overhead supply situation looks like. And of course, this is a little mark here is the 18-month mark. So basically, for overhead supply, what we do is we go to where it closed, and it closed right here about 115. We draw a line. There we go. So there's a significant amount of overhead supply here. It has pulled back. It is moving higher, but this is going to be a problem with this stock. So be very careful buying this. I'm not sure, depending on the market, I'm not sure I'd buy this one right now. I don't think it's strong enough. Part of the problem, of course, is this overhead supply. Here's what overhead supply is. People that bought it back here, they'll hold it, it goes down. Okay. Now it's finally starting to come back, break even. They're going to sell it when they break even. This is overhead supply. So when you have a lot of overhead supply like this, now fortunately this is out a little bit more than a year, but there's still a lot of overhead supply on this one. I'd be really careful buying this one. The numbers were okay, 10% up on the sales and 5% up on the profits, but I would hold off on this one. Probably would not be a buyer for the not be on this one because of the overhead supply situation. So I would be super duper careful here. All right, thanks Lisa so much. Where's the best point? Good question. How far below the 21-day line? Well, actually, the way I do it, it's a little bit different. I typically like to look at the. It depends on whether or not you're swing trading or you are position trading. But basically, what I do is I like to put it as close. Let's take a look at Applied Materials here. I'm going to go over here to the daily chart. Now, typically, you have to look at kind of how it's trending. Right now, it's relatively close to that 21-day line. So basically, if you went 3% below that, that would be a good place to go. So about 114, that's about, let's see. So that would be about 111 or so, about 3% below that line. Now, typically, the rule is you don't want to lose any more than about 7% because you want to keep your losses within 8% of where you buy it. So, one just great rule of thumb just to begin with is if you buy 100 shares, go ahead and do a calculation and see what 8% below that number would be. Let's say you bought 100 shares of a stock at $100. I would put half of my stop loss at 93. Okay, that's where I put it. And then I would look at the other half of it. I would put that approximately 3% below where I bought it, about 97. And that way, now you can do it all in one tranche, but I like to have two tranches where if it goes down, it sells half of it, reduces your position so that you aren't hurt as much. So that's kind of how I like to do it. But you can always, depending on where you buy it, it's not where on the 21-day line, it's where you buy it. So if you were to buy the stock, let's say at 100, and you would want to put your stop loss 7% below that. You would want to put your stop loss 7% below that, or if you're right at the 21-day line, about maybe 7% below that line or 3% below that line. But what you want to do is the exercise here is to keep your losses within 7% of your costs. That's very, very important. All right, energy transfer for Charles. Thank you, ET. That is the. I have a friend that really likes this stock. ET really thinks he's done real well with it. Nice dividend stock, and I think this energy transport area is going to continue to be a really good area. I think because it's a high dividend paying area. There's just and we do have a supply chain issue. It's also a very cheap stock, interestingly enough. By the way, Energy Transfer Limited Partnership, this group owns Sunoco, a significant portion of it. I just thought I would mention that. It definitely looks like it's hanging out at the 21-day line. Let's take a look here. Yes, it is. It's basically 1% above the 21-day line, so that is good. Let's kind of look at the checklist on this one. Not as good a checklist as I'd like to see. It's a 67%, which is okay. It does have it's low on the earnings per share, and the sales it weren't up as much as I'd like to see it. So these are kind of the fundamental analysis pieces of it. So let's look at those fundamentals to see kind of what's going on there, and see if we can. Got to show it to you on the screen. Let's look at the fundamental analysis on Energy Transfer. So go over here and look through the fundamental boxes. It just reported their sales are up 10% and their profits are up 17%, which is good. But what you're looking for is 20% or more here. So kind of fails on that, unfortunately. This is actually very low PE ratio, 9. That's very low, but not unusual in the commodity space, which this is sort of in the commodity space. Let's look at the outlook for the earnings. The earnings they're saying it's going to be up 10% this year, but in 2004, they're looking for a decline of 4%. I don't know why that is there, but let's look at some of its competitors. Here's the thing. You would probably be better off in some of the other companies like Sting or TK Tankers. Let's look at TK because I do like this stock. I've owned it. It's called TK. It's called TK Tankers. TNK is the symbol. Let's see if we can get it. Yeah, there we go. So TK Tankers. This might be a good alternative to Energy Transfer Partners. Now it's a little bit more expensive. It was at $37.50, but look at this. It's moving up extremely well. This is $36.60. Is sort of that's the that's sort of the buy point. But look at this thing. It just continues to move higher. And, who knows if this will continue, but this has got an extremely strong checklist. So I like this TK Tankers a lot. 98 relative strength. This is what I like to see. So I do like this one better than ET. Let's compare TK Tankers with ET just to see kind of what the deal is here. And let's see. ET is the comparison. So looking at this, pull this up here. So this is kind of the situation when it comes to the comparison between TK Tankers and TK Tankers and ET Energy Transfer Partners, which is in the same group. But you'll notice, basically, since the beginning of February here, approximately, TK has done well. It's just been on this upward trend, whereas ET has leveled off. So I would go with TK Tankers. Just my opinion, of course. I would go with TK Tankers here. That kind of gives you a look. So let's go back to the chart. So here is TK Tankers. This is what I really like about it. It has this really nice upward trend, 98 relative strength. And let's just look at some of the fundamentals on it just real quick to see if this is worthwhile. Okay, yeah, this is really what you got to look at here. Look at this. They're getting ready to report. They're going to be reporting here pretty quickly, but their last quarter they were up 141% in terms of their sales, 200% in terms of their profits. So this is a very profitable company right now. It's a tanker company. Let's see when earnings are going to be. So earnings are coming in, and the 24th are going to be here on the 24th. So we've got a few days on this one, but this one might be something that you could buy right now. Now, here's what I would do. If I bought this one, I would buy this and sell it before earnings. Earnings are on the 24th. So that's kind of my take on that. Looking at Energy Transfer Partners, I think you're going to be better off with TK Tankers, to be honest. All right, let's look at Trip was strong, and it took all my profits. Ouch. Yeah, that kind of sucks. I heard about this one. I wasn't in TripAdvisor. I wasn't in this one, but I saw the results of this one. So let's pull that up on the screen here. There we go. So here it is with this is the weekly chart here um, for TripAdvisor. It was looking so good, and then look at what happened. Bam. I guess it's there we go. There we go. Yeah, just fell off the cliff. I don't know exactly why that happened. This is why it's so important to sell before earnings. Okay, so here's the rule, and that I like to use. And then I did this with Shopify. It saved me 8% easy. Going into earnings, you want to sell something. Why? Because that's just the way it is. And then you wait to see what earnings will do. If it comes on the other side, then you can buy it back. But always try to sell before earnings, especially in this market. It's too volatile. And that's kind of what happened. Earnings came in, they came in really good. And then why did it drop? I don't know, but it did. And so that's why, again, you got to sort of look to sell the day before earnings. And that was the day before earnings right there. And so, yeah, and it just collapsed after that. So sometimes that's the best course. None of these rules are hard and fast because it just doesn't work that way. Sometimes some of these you're going to have to hold through earnings, but in this kind of environment, we're in a sideways market. I'm kind of in a run and gun mood where you just got to get in there, take your profits as quickly as you can, and then go. And then go away. That's kind of the way it is, and then come back in. All right, this is Eric Spence, 63. Can you do CF for me? Of course, this is CF Industries, and it is a large manufacturer of fertilizer. And this was great about a year ago, but as you can see, unfortunately, it is in this downward trend. Now we're looking at the daily chart, but here's the problem, and this is why stop losses are so important. Again, we had what they call the death cross. That's when the 50-day moving average crosses below that 200-day. That's showing a lot of weakness, and obviously you can see the weakness there coming into the issue. It's got a relative strength of 21. I just wouldn't buy this one. It is just too weak for me. I want to see something that's much, much stronger in the market. Now, right now, in the agricultural chemicals area, this is not an area that's doing well. We're going to want to see what is in that particular area of the market. And basically, this is one SQM. This is the Chilean company. This is doing the best, but still, overall, this area was doing so well, and then now so not so much. So this is the best of the breed, and it's having trouble staying above the 200-day line. So I think right now you just got to wait until there's more strength in this area, in the agricultural chemicals area, to buy CF. So that's my friend. Why so few funds have ownership in the SPY? Well, part of the reason that they don't, this is a good question. The reason that funds don't typically have ownership in the spider is because they're making up the spider. They're buying the components of the spider. Now, the spider's 500 stocks, obviously, weighted to their valuation rank. So they won't buy the spider because essentially that's an index, and so indexes typically are not used by funds. So ETFs typically will be one specific thing. For instance, the QQQ is the top 100 stocks in the Nasdaq. You'll find though that there won't be there are going to be very few funds that own the QQQ. Now there are some exceptions if they're dealing with commodities, but typically that's why if you know it doesn't form a that's why other funds typically don't have ownership of the things that are in the spider. So that's kind of the long and the short answer there. Shorting Tesla, Jim. Let's go. All right, baby. You've got, and I think you're maybe right on this one. Here's why you may be right on Tesla, and I hope you are because that would be awesome. I'm thinking about doing it as well. I haven't shorted it yet, but you are looking right. You did do today. It moved very nicely. Let's for a short position. We came up and we got here's the reason why I think that you really may be onto something here. Let's take a look at that weekly chart. Here is the line that's showing it's showing the overhead supply line. I call it the overhead supply line. Let me just take off some of the stuff that's getting in the way here. Just take that off real quick because I have my marks on it. But basically, what happens is, you see, you can see there's this. All right. Well, someday it's going to work. Anyways, there's this line. This is 18 months. Okay. What overhead supply is? If we take a look and we draw a line we're at approximately 200, which hopefully it'll let me do that. It's not really letting me. But if we do that, you notice that there's all of these people bought above 200. So here's what overhead supply is all about. When a stock comes up to where to resistance, all these people that bought it there, they're going to look and they're going to say, well, I'm breaking even, I'm going to sell. So what happens with overhead supply is that as it moves higher, there's resistance in it moving even higher because of this overhead supply. So I think you're right. I think there's overhead supply at about 200, and I think you're going to do well on this. I think you're going to do well on this short because what's going on here is there's all this overhead supply. As Tesla tries to move north, it's going to be impeded because the people that bought it, 6 months to 18 months ago, all bought it for higher numbers than you're at. So if it goes higher, they're gonna want to cover, they're gonna want to break even, and when they do, that is going to cause that's when the overhead supply is going to come into effect. So I think you're really onto something, and I hope that you're going to do extremely well. I think you may do very, very well. Hey, thank you, man. I have 700 shares of Apple. Would you sell half and buy something? Absolutely, I would, and I'll show you why. Especially in this kind of market, you just don't want to be more than about a quarter invested in anything, because when we're in a downward trend. Now, how do we tell if it's an upward trend or a downward trend? Okay, because I'm telling you, all this stuff, and so what I do typically is I'll look at the spider, SPY. This is the chart that will tell you what is the general overall direction of the market. Now, if you look at the weekly chart here, you can see that overall we're in this downward trend, okay? But since from here to here we're in an upward trend, so we're in a bear rally. We're in a rally. Now, if this thing were to move up to about here, then we would if this continues up, then we can possibly move to an upward trend, and we will have bottomed. But I still don't think we've totally bottomed. We're currently in an upward trend, but it's part of an overall downward trend. So we've got to kind of wait, for that to happen. So that's one of the things I would look at. All right. So now you're looking at Apple. Here's the way that you can tell something about Apple. If you go over and you look at the thing called the QQQ, one of the largest components of the QQQ is Apple. as a stock. So if we look at the QQQ, we'll notice that hey, the QQQ is starting to make this movement up. Now it's kind of it was pulled back today, but it's starting to make an upward trend. The question is, let's look at the QQQ versus Apple. So what I'm going to do here is I'm going to look at the QQQ. I'm going to put this back a year, and then let's go to Apple. Okay, here we go. All right. So you'll notice on this. I say you'll notice, but I don't have it up. Hold on. Let me put it over to the comparison chart here. You'll notice that the that's TripAdvisor. Okay, you'll notice that the QQQ almost directly tracks. You'll notice that the QQQ almost directly tracks Apple because Apple is such a large portion of it. So here's what I would do. I would sell. I agree with you. I think you need to sell half of Apple, and I think then you need to buy something that's in a different part of the market. And what I would do is I would look to see what is the strongest part of the market. Now, right now, semiconductors typically are doing very well, but I would recommend for you to sell half your position because you're just too exposed to the market with 100% of your investment being in Apple. So I would definitely sell at least half of it. Now, here's the thing about that: if you have 700 shares, I mean, it's and you're down more than 7%, you may want to consider selling. You really might want to consider selling. Now, it probably will continue to go up. So, that's a hard one to say. But I wouldn't want to be nearly as exposed to Apple as you are. I think that would be not a good situation here. All right, from Sarah, Jim, are you? Absolutely, I definitely am. I'm looking at this because I stopped out. Okay, absolutely. I'm up about yeah. I'm very profitable. My first 3 weeks were not that profitable, but February has been very profitable for me. I'm up pretty strongly, but I've been taking my profits very very quickly. So that I definitely am up. I definitely am up on the month. So hopefully I'll show you my results when I get all this thing when I get everything entered and cleaned up. Mr. Jeet wants to see CPA. Let's CPA. Let's get CPA. Copa Holdings. I think is this okay? This is the Central American passenger airline, I believe. Yeah, it doesn't look bad, but you know what? I'm really bearish on. Now I like freight airlines better than I like passenger airlines. They're definitely um, in terms of their fundamentals, they were up. Their sales were up. Their profits were up. But I don't know. I'm a little bit leery in this particular area. But they do have a relative strength of 90. I mean, I could see this for a short-term trade. It's got a 100% checklist. The question is, can you buy it at this level? Let's see. I just don't like airlines overall because I think overall they don't make very much money. Yeah. Okay. Yeah, you could definitely buy it. You're at the 21-day line, so definitely you could start a position here, and it does look like it does look like this would be the better position because you're close to that 21-day line. So I would say yes. I would say yes on Copa Airlines. I probably would not be buying it with you though, just because again I just think that there's more profitable sectors of the market than Copa than the airlines. All right, Jim. So okay, oh, this is okay. So towns, oil services. You're not kidding. Well, you know what? I'm probably going to have to sell out of my. I'm very near my stop loss on Chevron. I've reduced twice, and I think tomorrow maybe the end of the deal. So tell you what's happening. Hey Jim, do you use ADR for your stop losses when you're trading? I don't. What I do is I just use the hard stops typically and then I just divide them up. I use the market stop. So if it moves down below, it just sells it out immediately. So I usually do market stops. Average true range. I just use the market stops. I'm not that fancy on them. All I do is that if it drops to a certain range, it immediately sells the thing. So that's kind of what I do. So, but what I do is I will break it up. Typically, I'll have a stop loss at 3% below where I bought it for 50%, and then I'll have at 7%, I'll have the other 50%. So because sometimes when there's more volatility, you just want to reduce the position. You don't want to be totally out of the stock. So that's what I do. Sometimes I'll set these two stop losses, one at about 3% where I bought it from, and then one at about 7% below. So that's kind of my strategy. Pretty simple. Palantir, this is one I did sell today. And I'll kind of show you a little bit on that one. I did well on this one. It was really a run and gun. It was really a short trade. I mean, I didn't really do, I didn't hold it for very long at all. I held it for, I think, like 4 days or something. Not very long for me. Let's go to Palantir. There we go. Here's Palantir. So basically, this thing has been, I mean, and again, this is the problem with all these stocks that have pulled really, really way back. What I was talking about, overhead supply, this really applies to something like Palantir. This is one of the reasons I was so quick to sell this one after it gapped up, because again, you see, here's the problem. If you draw the line, and here's where the overhead supply line is. Okay, there's an awful lot of people that bought it way above $10, so it's going to kind of consolidate and kind of run in a range here, kind of down, up, down, up, down, up. It's going to go like this. Now it's probably going to pull back down, maybe to 8 or maybe down to 6. Then it's going to bounce and it's going to go back up. So I do think that this one probably will pull back here and may give us another chance. This one, I'm not looking really to own this one. I'm just looking to trade it. Yeah, you see, it came up to $10 for Palantir. Basically, is the resistance. So it comes up here now. Why $10 is so important is because at $10, that's where the big institutional funds will start coming back in. But that's resistance. So what's going to happen is it's going to pull back. I suspect it's probably going to go back down to the 200-day moving average, and I think it's going to bounce there. That's my guess. The 200-day moving average on Palantir basically is at 821. So if it comes down to about 821 and then makes motions like it's going to bounce, this might give us another chance to get into this stock, because I do think it's going to kind of just do that for a while, with the ceiling being at about 10 and the floor being anywhere between the 50 and the 200-day line. So that's kind of what it's looking like. All right, ATO is a volatility indicator. That's why. Okay, yeah, no, absolutely. Volatility is definitely. I mean, I don't track average true range, but I'm sure I could turn it on. I don't use it though. But it's a great way to go. Example, 7 is 1.5 times. Okay, that makes sense. That's a good point. I just do hard stops, but that's actually probably a better strategy than what I'm using. That's probably a better strategy than what I'm using. But I can see where if it moves out of the. Now there's another way of looking at that, and that's what the stochastic indicator is there for. So looking at Palantir, let's take a look at the stochastic indicator. I do use this a lot too, and this is the overbought, oversold. So let's pull that up there so we can see it. Let's go here. Let's see if I can share the screen with you here. And what this is, and this is at the top here. This, if we're down here at 20, that means that it's basically oversold, and then up here at 80, it's overbought. So this is really the Pareto's law. This is basically your zone in there. And what happened is that it was falling, which was, and then we took the bounce, and then boom, it went to an overbought position. So So there you go. So sometimes you can get an idea from the stochastic indicator, and this is for Palantir, and you can see that it definitely moved up quickly. This is where I bought it basically at about 40, and then I unloaded it at about 80. So that kind of gives you a good look at that. That's another indicator that I use, stochastic indicator, but I don't use it for. And I probably should. I probably should using it for day trading. All right, let's look at J and J. This is Johnson and Johnson. Let's take a look at this one. J and J. I haven't traded J and J in a while. Not really since I was trading Moderna early, but I haven't done really much on it since. But this just isn't looking good. This is not a good chart. All right, let me just show you. This is a good time to sell, and let's pull that up. This is probably a good time to sell here. Why? Because we're starting to see the 50-day line move below the 200-day line. This is what they call the death cross. So the trend, unfortunately, is down on this one. 25 relative strength. We're below that 200-day line. Just not a good place to buy it. I probably would not be in the stock just because, even though it has a terrible checklist, I would not be in Johnson & Johnson. So I just want something that's in a top, that's in a better area of the market. Let's look at better areas of the market. One of the better areas of the market, I believe, is ship transport. Let's see if I can. I don't. Let's look at the good areas of the market right now, and see kind of where we want to be looking where we want to be looking. And I'm going to look at this. This is the 197 different groups of the market, and it's a good place to look for strength. Okay, so this is what I'm going to do is I'm going to sort this here by industry group rank. Okay, I want to see kind of where the money is. Okay, because this is a show me the money show, right? So here we go. Number one area of the market currently is oil, gas, and field services for oil and gas. Retail oil, retail, office supply. There's not very many people in there. So leisure, movies, and related has been doing well. Computer services, leasing. So some of these have come up quite a bit, but we want to kind of look. This is kind of where we want to look for potential ones. Now, one of the areas that I did have a stock in that I did sell is the apparel and shoes. This is where On is. I don't know if you've heard of this stock, but it's a Swiss company that makes tennis shoes, and this is the group that it's in. If you can see, this is a good. There's a few stocks in this group. Nike, of course, is the big one. On is the second one. This is one I did sell today. I mean, I sold this one actually yesterday, and it did kind of take a dive. Let's see if we can. Yeah, I sold it yesterday. I was very, very fortunate in that, and then it took a dive. But this one, I think, could be setting up. Now, you don't want to buy it here. You want to wait a little bit. You want to wait until it moves above that reversal line. But you can see there's the golden cross. The 50 days moving above that 200-day. It's 80 relative strength. These are the kind of stocks you want to look at. It has a good checklist. 78 is pretty good on this one. And at least because from the first part of the year, it's looked pretty good. Let's see if we can graph that thing. And let's put in Nike. So looking in the shoe apparel group, this is one that I think we might want to take a look at. You might want to look at this one for another entry. I wouldn't buy it tomorrow, but I would be on this is on my watch list, because I do think this is one of the top groups, and I think you can see it there. This is on. That's the name of the stock, and then Nike. Both of these have done pretty darn well. If we look since the beginning of the year, this is 1-1. Nike is up about 5%, but on is up 30%. So those are the kind of stocks you want to be looking for. How did I find that? Well, what I did is I went to the group apparel shoes that was doing very well and moving up, and then I took a look at the top two in that group, and that's how I found that one. So That's kind of an interesting thing too. All right. Can you use the chandelier stop function as a trailing stop loss if you use ATR? You know what? I have to look into this. I don't use these, but that definitely can do that. Definitely can do that. All right. Well, I've kind of run up the time here. Thank you definitely for taking a look at the show today. And please, if you can do it, if you have friends that are interested in trading stock or that kind of thing, please tell them, please like the show and tell them about the show. I'd really appreciate that because it gets us out here to lots and lots of people. But smash the like button, and hopefully we'll have a little bit better day tomorrow. We'll be up in the market, but until then, happy trading.